Hi, everyone. I'm just going to give a few more seconds to let some more people funnel in, and then we can get started. All right, looking good. Welcome, everyone. My name is Carmen, and I am the training coordinator at the Temple Small Business Development Center. The Temple SBDC helps small businesses start and grow. We provide free one-on-one counseling and a variety of low to no cost webinars. We are proud to be a part of the nationally accredited network of SBDCs with over 1,000 centers across the United States. You have joined us today for QuickBooks for Beginners. A copy of today's PowerPoint and a link to the recording of this session will be sent out to all attendees. And while all attendees have been muted, we encourage you to post any questions in the chat or Q&A. And now I will turn the floor over to Connie.
Good afternoon. I'm Connie Mitchell. I am Mitchell Business Services. I've been in business since 2001. Prior to that, I had several accounting type jobs in lots of different industries. So I come to you with a lot of knowledge. I have experience in teaching and training QuickBooks, and it really has become my passion. So I'm very, very pleased with this opportunity to be able to share some of my knowledge. And I highly encourage, if you've come to this class with any questions, to go ahead and enter them into the Q&A now, because I do keep my eye on that. And I want to give you an opportunity to ask your questions and then have the time for me to answer your questions today. So this is the little bit about me and my contact information, and I'm always available for a discovery call. And today's class objectives, of course, that's only the tip of the iceberg, so to speak, because there's so much to learn, not only about bookkeeping and accounting, but about the software that we're focusing on today, QuickBooks Online, and then just a couple of hot topics I like to talk about in the beginner class are the common functionalities and some of the common problems, such as how to pay a bill, how to receive a payment, helping you understand what the term undeposited funds are, which is a unique term to QuickBooks. You won't find undeposited funds anywhere else. And again, that opportunity for Q&A.
Speaking of Q&A, sorry to interrupt, Connie. We already have one.
Good, thanks. How important is it to use the most recent version of QuickBooks? I have QuickBooks Pro 2014. So that means you have the desktop, and QuickBooks will support the desktop only for 3 years. So if you have a question or problem and you call QuickBooks, they won't be able to help you. When you're that old, you're also missing out on a lot of the new and improved features and functions, since it's been upgraded every year. And if you reach out to someone like me, or anybody else that has been keeping up to date on QuickBooks, or trying to keep up to date on QuickBooks, our answers might not be exactly what you need, because we forgot about all the different things that were happening in 2014. But having said all that, if the 2014 version is still serving your needs, then you made a smart purchase, and there's no need to worry about it. It's when you run into a problem, and that is a problem, or the newer versions, if you were to go out and buy the 2021 version of QuickBooks Desktop, I think they're pretty much locking you into an online subscription service, because they want to move away from the desktop. So I hope that answers your question. So back to the presentation. QuickBooks, there's all kinds of versions of QuickBooks Online, and a Google search, a quick question to other people who have QuickBooks, You could send me an email. I could help you try to determine which version is right. But the different versions of online are like Simple Start, Essentials, Online Plus, um, Enterprise version. They have um, spreadsheets available on the try it now for 30 days kind of page where you can compare, this version does this version doesn't do it, and the different variables in the prices. So it depends on what your needs are. And in any kind of software purchase, that's kind of the mindset you should have, is like, what do you need it for? What are the results that you or your business needs it to accomplish? Um, QuickBooks View. Okay, so I have also in this presentation, some of these slides are screenshots of a sample company, and I do have this sample company live. I can click on anything in the sample company and show you exactly what I'm talking about as I go through the PowerPoint. So the PowerPoint's trying to keep me focused on what we're talking about for the class. And the sample company is really the soup to nuts, everything that's available. So again, the Q&A, I can bounce around a little bit because I do have the sample company. And this is, as you see, what it looks like. The QuickBooks View, the new plus button, that I'm going to bounce over to the live version. That's talking about this new button, which, if you don't already know, that's a new feature within QuickBooks Online. It's a recent change that they made. One of the nice things about the online version is that they're constantly updating and improving the software, but it's also one of the annoying facts of life on any online software is that it keeps changing. So this is a new button, but it's also a cool, oh, now it's going to be slow, maybe because I had it open for too long. Let me do a refresh and see what happens. Okay, maybe it's just slow and I'm impatient. So anyway, when you click on that new button, it's kind of like, okay, you want to do something new. And QuickBooks is trying to be intuitive and give you an easy way to find something to do. So if you're wanting to do something new regarding your customer, like an invoice or receiving a payment, or if it's a vendor and you want to enter a bill or pay a bill, this is the starting point. So you would just click on it, but it's all drilling down from this new button. So that kind of makes it nice. Quick tips about paying your bills in general. You want to keep your bills organized. You want to keep your business and your personal banking separate. So you want to have when the mail comes in, or when the email comes in, or when the, I don't know, the automated words would be for receiving your bills. You want to make sure it's an organized manner, so that, say you only want to pay your bills twice a month, when it's time, when it's that second week of the month on that particular day at that particular time that you've designated on your calendar, it's okay, I'm going to sit down, I'm going to enter my bills. It's all organized. It's not a mess, because that'll help things move quicker. Of course, if you're organized, it'll help you with your accuracy, because it's organized and you're less apt to make a mistake or lose something or get it buried under a different pile. You want to also understand your approval process. It's a little bit different whether you're the business owner or if you've hired somebody to handle some of your bookkeeping tasks, which is often one of the first things that a business counselor or mentor or guide or whatever you would want to call that person that's helping you, they're going to say you should outsource your bookkeeping to somebody else because it's something that will free up your time to do something that's more valuable within your business. That's all fine and good. I agree with that completely. But you want to have an approval process that that person that you designate to pay your bills can then approve the bills. You want to, I'll tell you a quick story. When I first got a job, I was placed in the accounts payable department, and my job was to open the bills and pay the bills. My dad was a project manager for this construction company, and I was all excited one night. I came home and I told my dad I had processed the $17,000 invoice from Standard Electric Time for clocks on the job site that he was in. And he said, "Oh, why did you do that?" And I said, "Well, they mailed the bill. I opened the bill. I filled out the form to be sent away for the check to be processed. And then it came back and I mailed it out to pay the bill." And he says, "Well, we never received the clocks." So that's when I started going to school, and I wound up going to Goldie Beacom College and University of Delaware and Widener. It took me like 20 years to get my accounting degree, but it's, I was also married and raising a family. But long story short, I learned about having a purchase order and comparing that to the packing list and the invoice. So it's kind of like a three-way match that when you get that invoice, it's what you ordered, that you received what you ordered, and that you're also approving the amount that you're paying for what you ordered. So that you don't want to just willy-nilly open your bills and pay your bills or tell someone else to do it for you. And in a lot of cases, as I've worked in the accounts payable department in other businesses, there's a stamper. I'm stamping on a piece of paper because I'm old school. So there's also online approval processes. Bill.com is one such app that syncs to QuickBooks Online, where you can have your bills mailed to them or forwarded to them in email or directed to bill.com. And then your approval process would be somebody else within your organization who goes in and then clicks, yes, this bill's okay to pay. Then the bookkeeper will then be able to import it into QuickBooks Online, then go through this payment process that we're about to talk about. So this next step here, determining the one-step or the two-step process, that's kind of my terminology, because within QuickBooks Online, there's a one-step process, like if you just want to enter a check. So the bookkeeping behind entering a check or write a check is what you would click on. You're actually debiting the expense and crediting cash. So that's a one-step process. A two-step process is you're engaging a whole nother feature within the software, the accounts payable. So you're setting up an accrual where the first step is you're entering the bill to pay at a later date. And then the second step is that you go in and you're going to select that bill to pay. It's an important distinguishing understanding the difference between the two, because it's also a common error that I see, that people will enter the bill to pay later, and then when it's time to pay the bill, they'll write a check. So when you enter the bill, it debited the expense. When you write a check, it's debiting the expense. So what happens many times in a cleanup with a client, they don't understand why their expenses are double. And it's because they've entered it twice. And then you're going to choose your payment method, and I'll show you, the details of how to do all this stuff. But you're going to choose how you enter it, whether it's a debit or a check that you're mailing out, or a credit card, or the Schedule Melio. This is a relatively new feature within QuickBooks Online It's a third-party app that is built into the software. So instead of it syncing, it's there as another button to select that you can pay a bill with Melio. Melio then is a third-party processor who will take that information just like your online banking, and it will send a check out. Or the neat feature with Melio is that you can pay it with a credit card without your vendor even knowing you're paying it with a credit card. They're just getting their payment. So, and there's a free version of Melio. There's a paid version that has extra bells and whistles, but just so you know, that's out there. Okay, so here we go. How to pay a bill. This is the more detailed step-by-step process in the one step and the two steps, and I'll show you on the real sample company. But the one step process, like I said, you're going to click on new, you're going to select the check and then fill it out. In the two step, you're going to click on new, you're going to select the bill, and then you're going to select that bill to pay it later. Let me click on there. So, oh, I get 2 Q&As. Does Melio cost extra to use through QuickBooks? No, and yes. There's a free version, and there's opportunities to pay them if you want like special deliveries or faster deliveries. I don't know all the different ways in which you would want to pay them more, but I know if you need special handling, they do that for you. Kevin, we use desktop version. If we switch to online version, how does QuickBooks handle service outages beyond their control when we need to use it? Thanks for that question, because it comes up every now and then. The power goes out, or the internet goes down, or QuickBooks just rolls up and doesn't work. It's online life. I don't like it. Lots of people don't like it. And then they'll say, well, that's why I don't use online. I use desktop, because even when there's problems, they can still work. Yes, that's all very true. I like online better because I don't have any hardware hassles or worries. I don't have to worry about my computer failing. I don't have to worry about backing up my files, losing files. I can easily work remotely with other clients. My clients can easily have more than just 1 or 2 people helping them. The different versions of QuickBooks Online also come with 3 to 5 users, or I think up to 20 users, where each user can be tailored to have access to specific areas of the online. Online is safe and secure as it is with your online bank. So it has all those special encryptions and the multiple redundant backups, and they're constantly improving all of those scenarios in which the online features and functionalities can also sync with other apps that are out there. And there's thousands of them that are more industry specific. So while I love QuickBooks accounting and bookkeeping, it also falls short on some industry specific needs. And so that syncing is really what's happening today. And as a matter of fact, I'm going to a conference in Fort Worth, Texas in October to learn more about the cloud. And it's not just QuickBooks, it's all the different companies that offer cloud accounting, and all the different companies that offer apps that sync to it. And there's, it's a 3-day thing. So I'm expecting to learn a lot. I'm trying to keep up to date. There's a lot going on. I'm going to close the Q&A window and bounce back over to the PowerPoint to see where we are. Okay, so how to pay a bill. I clicked on the new, and say we want to write a check and pay, say you got telephone, well, say Diamond State. That's it. No, gosh, I'm old. Verizon. So we want to pay our Verizon bill, and they're not already in your vendor file or your payee file, so I'm just going to add it. I can save just the vendor name, or I could click on details and be able to add the address, and then it would remember the address for next time. But I'm just going to click on save. I'm going to choose the checking account is where I want the money drawn out of in my bookkeeping. I'm going to say I'm going to just say it's a debit, so I'm going to go online and pay it. Down here, I'm going to select the category, which is a new term that used to be called account, because it's part of the general ledger accounts, but they changed it to the word category to make it more understandable for people who aren't familiar with accounting terminologies. I think it was getting mixed up with the bank account, so they still call it bank account, but down here, this category is your expense account. So I can use the drop down arrow and say I want to find, I don't know, this is the sample company. So if I want to find telephone, it's not even here. So I'm going to choose utilities and say it's the cell phone for September, and say the amount is, I don't know, $65. And I can choose whether it's billable or not. If this was, say, you went to Home Depot and you bought lumber and you're a construction company and you want to bill it back to your customer, you could check here that it's billable. You can check it, or in Delaware, we don't have to worry about, well, I'm in Delaware. Some of you may need to check whether it's taxable or not. And then if it's billable, of course, you would want to choose your customer, or even if it's not billable, if you want to keep track of this expense for your customer or by customer in your records, you would choose from the drop down arrow or add a new customer. So say I just want to save and close. All right, so what I want to show you now is under reports and kind of confirm on the profit and loss for that expense that we just entered. We put it under utilities, telephone. Okay, that's Cal telephone. I didn't think telephone was there. Oh, okay, because it was here it is. Here's what I did was I put the $65 under utilities, and utilities is a main heading. So I'm going to change that. Instead of it just being utilities, I'm going to go back to that and choose the subcategory of utilities. So I'm going to change it and save and close. And now there's the Verizon bill that I just added showing up on the profit and loss report. So that's how to enter an expense using write a check. That's what we did. We just wrote a check. I'm going to just jump back over to the PowerPoint. So that was that one-step process. The two-step process, I'm going to go back over to Craig's design, and I'm going to show you, instead of using check, and expense is the same thing as check, except you're not using the check form. It looks, I'll show you. When you click on expense, it looks just like the check form, but they gave it a different name. It shows up on the reports as an expense rather than as a check. And I don't know, maybe there was people complaining, but I'm not quite sure why they made that distinction. But anyway, they act the same as far as that one-step process. Here is the two-step process where first you would enter a bill. So say we're going to enter a bill, and this time I'm going to choose Cigna Healthcare. And I didn't create a new vendor. I'm just using one that's already there. And so my category, let's see if insurance comes up. Okay, so insurance came up. It's not workers' comp, but I'm just going to choose the main heading because medical insurance wasn't listed as a subcategory. And it's pretty simple to add subcategories. You would just add it here and identify it as a subcategory of insurance. But just for time's sake, I'm not going to go through that. And description, it's an optional field. You don't have to even type anything here. These descriptions are nice if you put in the month of the bill or the description of what you're paying or the time range or any kind of detail, because this description shows up in your profit and loss reports. And it can be helpful if, at the end of the year, you're looking through and you're trying to understand, why did I do this or that? And these descriptions help. So say $350 and we're paying Cigna under insurance. Here's the save and schedule opportunity to use Melio. So I'm not going to use save and schedule. I'm going to save and close. So I'm going to look on the profit and loss report under, where is insurance?
Oops, sorry to interrupt, Connie. We have some more questions in the
Okay,
chat.
good. Let me pop down there. Okay, what version of QB are you using? Okay, this is the sample version, and I don't know if it says on the sample version what. I personally always recommend people use the online plus version because it's the lowest cost that also includes the opportunity to enter budgets. And I'm a freak about explaining the purpose and the benefits of entering budgets. So I'm not exactly sure which version is showing up here in the sample company, but it looks just like the plus version. It probably is very similar to most of the QuickBooks Online versions that are out there. Next question, can you connect QuickBooks so that process actually cuts a check from your bank? Yes. Oh, well, no. If you wanted to cut from your bank, you would go on to your online banking and cut it that way from your bank. I don't think there's any automation that I'm aware of right now that syncs cutting a check. Now you can sync your bank so that if you use because I do this myself, if I use my online banking to pay a bill and if they don't have the capability of doing an e-check, they have to print the check and mail it. It will sync into my QuickBooks Online as a payment was made out of my bank account. It'll tell me the date and it'll tell me the amount. And in many cases, it'll tell me who I'm paying. So from that, I'm able to add that information into my QuickBooks bookkeeping. So that's a functionality. A lot of times the QuickBooks syncing to my bank, it doesn't really know why I'm paying it. So it doesn't know which category to choose it. So I have to edit that transaction before I add it into my QuickBooks. But there's also a way to create rules so that the artificial intelligence behind the automation between QuickBooks Online and your banking online is improving all the time. So those rules are getting more accurate. And so there's less data entry. So that whole process is a pain in the neck, but it's worth the time because it improves the accuracy and then it speeds up the automation, which is really the goal to get this data entry part done quickly and efficiently and accurately and timely, so that you can get to the reports, your balance sheets and your profit and loss, which I spent the time on last week discussing, really in bookkeeping 101, because that's the goal in a lot of cases. The benefits of using any accounting software is so that you get the reports. Sherry is asking, if you enter a bill, will it automatically list it as an expense as well? Well, no, it's only listed as an expense if you choose an expense category. It could be that you're paying a bill and it's a loan payment. So it could be reducing a liability, and then that's the category you pay or you choose. Or you could be, writing a check for some other reason that I can't think of off the top of my head. Maybe you're loaning money out to somebody, or you're buying a building and you're buying an asset. There's all kinds of reasons why money would be leaving your business. So that would be why you would be setting up a bill to pay or cutting a check. And so they're not always expenses. So Regina's saying, how about debit? Will it sync from the bank? Yes. Debit sync, and any money that's coming out or going into your bank account, once you sync your bank account to your QuickBooks account, your QuickBooks account, all of it will sync back and forth. Now it waits in I call it a holding area, for you to be either adding or editing or matching or excluding. These things that are coming in from your bank don't automatically go into your bookkeeping record. You have to accept it, and unless you create the rule for it to automatically add, which I discourage people from using because it can automatically add a bunch of problems. How about debit? Well, it's okay. So I answered that one. Peggy's, can you do this with a desk to QB, a desktop? I think so. I think the desktop version is improving. I know I do have a client that is using the QuickBooks desktop, and he does it in a little different way than the way I sync with my QuickBooks Online. He actually he's getting the file from the bank, and then the files being imported, and then the files being uploaded into his QuickBooks. But it's working very, very similarly. But yes and no, kind of, sort of. So yeah, Peggy, I hope that answered that question. All right, so I'm bouncing back to the PowerPoint and closing out the Q&A here. So that was how to pay a bill. So you've got two choices, the 1-step or the 2-step. Gonna go forward. Receiving a payment. So I'm totally switching gears here. When I talk about receiving a payment now, I'm talking about customers. Now, the last time I taught this class, that I think a lot of people weren't happy that I switched so abruptly. So let me go back to this new button here. And so when I was talking about paying a bill, I was under the vendors and entering the bill. And the reason I'm switching abruptly, I'm gonna go over here to receive a payment, is just because there's only an hour for this class. And I really wanted to touch on two very common processes that you'll be using QuickBooks for, and two very common errors that I've seen happen a lot. So it's why I'm kind of stressing the difference between the 1-step and the 2-step process in paying a bill. Also, that opportunity for making a mistake happens in receiving a payment. So the difference between the 1-step and the 2-step here is that the one step is called a sales receipt. So the sales receipt, when your customer is giving you money and you want to record that sale at the same time they're paying you, there's no need to have the two-step process where first you send an invoice, you're setting up an accrual of an accounts receivable balance, and then later on they're going to pay you. So you would receive the payment against that invoice and reduce your accounts receivable balance. That's that two-step process. There's the one step is you just enter the sales receipt. It's debiting cash and it's crediting your income. So jump back over to my slide. So that's what this is talking about here. Determine whether it's a one-step or two-step process. And again, those are my kind of terminologies because I'm trying to reduce errors. I'm trying to reduce if you're new to QuickBooks, you're new to starting a business, you don't know this. So I'm trying to point it out to you now in a way that hopefully you'll remember and not make the mistake. So when entering in QuickBooks, it's important to know really what you're doing. And you can create duplicate sales if you enter an invoice, and then when they mail you the check, you create a deposit to the bank, and then you record that sale to your income account. You can go for years and think you're doing the right thing until somebody comes along and looks at the reports and says, hey, your sales are really out of whack. They're just about double. Well, this is why. So I've had the experience of going into a client and they just couldn't use the reports. They didn't understand why they were wrong. And this is exactly what they were doing. They were entering invoices, and then when a customer was paying them, they were recording the deposit to the bank and recording that sale again. So how to receive a payment. Here I'm going to show you exactly how to do it. And this is the screenshot, and it even shows you receive a payment. So let's jump over to the sample company, and we're going to go in and actually let's see if there's any invoices to pay. No, any invoices that a customer could send you a check for. Sorry, my words aren't right here. Let's look at the balance sheet report and see if there's anything sitting on the accounts receivable. So there's $5,281.52. So let's go back to the reports again and look at the aged report. So this is here's that bottom number, $5,281. This is the breakdown of everything showing on the accounts receivable on your balance sheet. So these are all the outstanding invoices. And so let's just pick one. Let's say John Melton is paying his $450. So let's go in here to new, and we're going to receive a payment, and we're going to choose John. And here's his 400. Okay, so the original invoice was 750. He must have made a prior payment to you of 300, and the balance is 450. So I'm going to move something out of my way here so I can say, okay, and this is an optional field. You don't have to fill it out, but I'm just showing you. You could say he's paying me with a check, and it's reference number, 5689. Here's the oddball feature with QuickBooks. You're depositing to undeposited funds. There's a drop down arrow, so you could choose to deposit right to the bank account. The undeposited funds feature is here so that if you're receiving multiple checks in the mail, you're receiving these payments and you're entering these payments individually, but you're letting these checks, and I'm tapping my desk. You can't see me doing that, but it's the visual here of you've got a stack of checks you're going to take to the bank and make a deposit. So that accumulation of checks on your desk, those are the undeposited funds. So it's a feature, and the function within the software allows you to record all these individual receipts, yet deposit a grand total amount, so that the deposit figure on your bank statement will look the same as the deposit figure on your check register. Then when you reconcile your bank account in your bookkeeping or in accounting and your bank account with your bank, when you reconcile those two, it's easy, it's simple, it's quick, it's not a problem. Your bookkeeper will love you. So I always suggest using undeposited funds. So that's what I'm going to do. I'm going to use undeposited funds. I'm going to say 450 was the amount received. It's pre-filling in here that that's the payment amount, and I'm going to say save and close. So he's off this report, and so that's how to do it. That's how to receive a payment, and that's a little bit of an focus on this undeposited funds. I'm thinking of lots of questions that clients have had in the past. You know, they're like, what are undeposited funds? Because they'll see if there's an amount showing on their balance sheet report, and it's a common problem that, you know, it could be a lot of money and they don't understand what this is. And it's because they haven't properly deposited monies that they've received from customers. They did everything right, but they didn't record it right. So when you make a deposit to the bank, that's another feature over here. That's another button in the new. When you go to make a bank deposit, you want to make sure that you're choosing from these payments, which were from the undeposited funds. You're choosing all these different payments, and then the total is what's going to be your bank deposit. So again, I'm just trying to point out some common errors that I've seen without confusing you too much. Let me move on, see where we are here. Okay, how to create an invoice. So this is going to be, well, let me just run through. I'm going to show you both ways. This is a screenshot of what I'm going to show you. I'm going to click on the new button. I'm going to fill out the customer, the email address, the physical address, the terms, service date, product, service that you're selling, the description, quantity, rate, a reimbursable expense, and then save and send. So these are a lot of the fields that are available for you to fill out. And then the email address up here, if you've got it for your customer, and this is what I do with all my customers, they get their invoice emailed to them, and it's not showing here, but on this part of the form, if you have it set up for your customers to pay you via ACH or credit card, or I think those are the two options that are showing on my invoices, that when your customer receives your invoice, they can click on it and pay you. So jump back over here. I'm keeping my eye on the time too. So we go into new, and we're gonna invoice a new customer, and okay. So because I'm on the sample company, it's not letting me, and I don't want to go through the whole setup process. So that's why I entered a slide with a screenshot. Another way to show you, though, is, okay. So another way to show you would be just clicking on a current invoice and or actual invoice within the sample company. So this is what the invoice form looks like, where you're choosing your customer, the email address is there. And again, this would be the area, it would be showing that you've allowed your customers to pay you via credit card or ACH. All these addresses will pre-fill for you if you set up that customer in the customer center as a detail. These products and services, there's lists that you build so that you can designate what exactly you are selling. And then there's mapping behind the scenes even for that, so that QuickBooks knows which accounts to debit and credit, because you could be keeping track of different income categories based on the product or service that you're selling. And again, your rates and your quantities and your amounts, whether it's taxable or not. And so you can add a little message on your invoice. You can also add messages on your statements. Attachments, this is a relatively new, cool feature. Say you're, I don't know, you're in business where it might be helpful for your customer to also refer back to a picture you took or a drawing you took or a contract that you have. You can actually attach something to the invoice. So I'm not saving or sending, so I'm going to just close that out. And I didn't change anything on the sample company to really reflect anything different in the reports. I'm going to bounce back over here. This slide is really helping you again understand what undeposited funds are. So it's this stack of checks that are received and then accumulating in this account called undeposited funds. And then when you go in to make a bank deposit, you're choosing all these checks and then making the deposit for the grand total amount. So it's helping to bottom line make that bank reconciliation process easier. And if you do that, you're saving your bookkeeper time, you're increasing the likelihood that your reports are accurate and timely. So it's a good idea to use the undeposited funds feature, but you have to use it right. And this is the screenshot. I think I did show you on this receive payment, where this undeposited funds. So we highlighted it for you. If I was presenting the class and not actually jumping into the online version, this slide helps you understand it better. And if you're looking at the slides later on, it'll help you remember what undeposited funds are. And there we go. We're at the end. I've got 3 Q&As. Do you have to manually input checks to use the undeposited funds? Can you use a scanner to insert a batch of checks? Okay, so the scanners are used to scan the images for your bank, so then your bank can make a deposit for you in the actual bank account with your bank. No, you're not going to use an automated scanner because that's not able to sync, at least not that I'm aware of, it's not able to sync all of the additional information, such as choosing which invoice that check is paying. And so I'm not aware of a way to do that with the QuickBooks and a scanner for batch processing of checks. Things change every day though. I don't know. But as far as I know, the answer is no. The invoice process is the 1 step. No, the invoice is the 2-step, because you create the invoice and then you receive a payment instead of doing the receive payments. So the other process, the one step is called sales receipt. That's the one step where the sales receipt is the form that captures both what you're selling and which bank account you're depositing the money to. So that's the one step. The two step is the invoice and then receive payment against that invoice. Sherry's asking, how would you record credit card processing fees? I take a payment of 10, but 2.6% plus 10. Okay, that's a good question. And can I just say out loud, I hate credit card fees. Why should they get any percentage of your business? Anyway, yes, you do have to account for fees, and I'm hesitating because there's so many different ways to answer your question, because there's like PayPal fees, which is a whole nother thing. There's if your merchant services is with your local bank, and your fees come out through your online banking, and the options are whether the fees are taken out with each payment or if there's a total at the end of the month. So there's all different ways of recording merchant fees, and the easiest way is to receive the payment in full. So you're recording the total amount of your income and your sales, and so the invoice and the payment are the same. And then the fees are entered separately because then they're entered as an expense. And you could have multiple different merchant companies, and so tracking the fees by merchant, it's easy, at least in my experience, it's been easy to lose track of merchant fees, and it's easy to just go back to the invoice and add another line on the invoice and reduce the amount of the invoice to make up that difference to receive the payment as a net figure. But then you're actually reducing on your reports that total sales figure, that sometimes you need the gross sales is not, and then the right amount isn't showing on your report. So it's a hard answer. It's a good question, and I hate credit card fees. Where can we find the slides for today and last week's session? So if you've registered, they're supposed to be being sent to you. I'm also aware there is a YouTube channel that is out there that I've been able to go back and view past presentations, but that's where they should be emailed to you.
Yeah, we do have a YouTube channel with all of the webinars. So Connie's should be on there. If you wanted a copy of the PowerPoint slides, you can always shoot an email over to sbdc@temple.edu, and they would be glad to send it on over to you.
Thanks for jumping in.
Yeah, of course. Sorry, that's a more me question. All right, Anna.
There's one more Q&A here. Can you process both personal and business on one QB version separately, or do you need a version for each? The official answer is get a version for each, because your business ideally would have a separate EIN number or tax ID number. So then for both worlds to be separate and compliant, you would have all your records in two files. So yes, the unofficial answer is no. You can do it. You can have income and expenses at the top, and then other income and other expenses at the bottom. So that is a way if you're self-employed and use Schedule C, and so you don't have two EINs, you're only using your Social Security number. So it's kind of legit to combine them to save the expense of the subscription. But is it worth it? No. It's really good practice to keep it separate. So down the line, if your business takes off, you haven't kind of commingled your personal monies, you haven't gotten into those bad habits of commingling funds. I see people doing it. I advise against it. And that's my answer.
All right. The Q&A up. We got another one.
Okay, popping up here. How would you or can you enter residual income? I love residual income. Well, it depends. You just enter it for what it is. If it's a deposit to your bank, then you're going to record that deposit to the particular sales income category. Because typically residual income, you aren't invoicing for it. You're just recognizing it when you receive it. But if it's something you anticipate getting, then it would be the two-step, the income, and then receive the payment for it. But yeah, residual income, that's just a different income. So it's a different category in your chart of accounts, and on your profit and loss, it would be separate item of type of income. Thank you. You're welcome.
Okay, while we have a quick break here as we're wrapping up.
Okay, one at a time. There we go. That one's done.
I posted 2 links in the chat. The first is a link to a 30-second survey about today's webinar. We value your guys' feedback, and it is required by our funders so that we can continue to offer these workshops. And the second is a link to office hours with Connie. These are based on a one-on-one basis, and you can hop in anytime today between 2 to 3. No registration is required, so if you want to hit that link, join us. We will be in for an hour after this session is over. All right. And I guess if we have nothing else, we are all good to wrap up here.
We got 2 more in Q&A. Did they just pop up?
It's a thank you.
No, great presentation. Thank you. Thank you.
All right. Thank you so much, everyone. Thank you, Connie. I will see you in 3 minutes.
See you in the office.
Everyone have a great rest of your week. Thank you.
Bye.